In the last few videos, we've been checking out the provisions relating to mandatory registration. We've checked out 8 points so far, and now we are going to move on to the last category, the last of the 3 broad categories that we've defined to simplify this process, which is of special cases. There are 5 subcategories under this. The first one is a simple one, that of interstate supply. Any person engaged in interstate taxable supply. It has to be taxable because exempt supply, exclusively exempt, is exempt from registration itself. So any person involved in interstate taxable supply has to be registered. Recall our example in the previous section. We'd had a manufacturer who was involved in intrastate supply, interstate supply, as well as interstate stock transfer. Because he was engaged in interstate supply, this person has to mandatorily register. The next person who's mandatorily required to register is a casual taxable person. Any casual taxable person has to take registration irrespective of his aggregate turnover threshold. Now, to understand this, we need to know who a casual taxable person is. Now, take the case of a person. This guy can be a supplier, a principal, or an agent, anyone who supplies goods. He supplies goods in Karnataka as well as in Maharashtra. In Karnataka, he has a fixed place of business, while in Maharashtra, he has no fixed place of business. So this is an important point. He does have a fixed place of business somewhere in India, but he doesn't have at a place where he supplies goods. This guy could be a mango trader in Karnataka who decides to sell mangoes occasionally in Maharashtra during the season. And that's the definition of a casual taxable person. That he's someone who occasionally undertakes transactions which could include supply of goods and/or services, whether as a principal, agent, or in any other capacity, in a territory where he has no fixed place of business. Because our businessman had no fixed place of business in Maharashtra where he supplies goods, he has to mandatorily register. For this, we need to know one more definition. What is a place of business? There are 3 types. A place of business could be a place where the business is ordinarily carried on. It could include a warehouse, a godown, or any place where the goods are stored or goods and services are provided or received. Or it could be any place where a taxable person maintains his books of accounts, or where such taxable person is engaged in business through an agent. So in Maharashtra, if a businessman had an agent, then he wouldn't be a casual taxable person. But we've assumed that he does not have any agent, no fixed place of business. So that's the definition of a place of business and a casual taxable person. An important point to remember is that a casual taxable person has a fixed place of business somewhere in India, but not at one place where he's supplying goods. The third subcategory under special cases is that of a non-resident taxable person. So here, our concept of a casual taxable person comes in handy. A businessman is either a supplier, a principal, an agent, or any other person, and he supplies goods in India, say anywhere in India, and he has no fixed place of business in any state or city in the country. So it's just very simple. A casual taxable person has a place of business somewhere in India, but a non-resident taxable person does not have any place in India. And that's the definition. He's a person who occasionally undertakes some transaction, whether as a principal, agent, or in any other capacity, but has no fixed place of business in India. So those were 2 main concepts that are new under mandatory registration, 2 new definitions. The fourth category is that of online information and database access or retrieval services. So this category basically covers a person who's supplying these services of online information or database access or retrieval, and that this person is supplying it from a place outside India to a recipient in India, but this recipient has to be a non-registered person. Simple logic. The services are supplied in India and the government needs to keep track of all the transactions, trade transactions occurring within the country. When it's tangible goods or services that a person has to come to India and provide, it's pretty easy to track from the moment. But if it's online, it's that much more difficult. So if the recipient in India is a registered person, then from the information of such registered person from its book, the government can track. But if it's not registered, then how would the government track? This is the reason why the supplier who's outside India, who's supplying these services to a non-registered person, will have to be registered. That was the fourth subcategory under special cases. The fifth one is that of corporate actions. Now we've seen what corporate actions are. They are either merger, demerger, sale, amalgamation, or any such thing. So in all these, you'll have a transferor and a transferee. So the situation is that the transferor has to be a registered taxpayer. If this is the case, the transferor is registered, then the transferee is liable to obtain registration with effect from the date of transfer. Simple logic. The transferee is taking over a business which is already registered, and so the transferee also has to be registered. Now there's one condition attached. If such transfer is by way of an amalgamation or demerger, which is based on an High Court order, then the transferee is liable to register with effect from the date on which the Registrar of Companies issues a certificate of incorporation which gives effect to such High Court order. That's just one small condition attached. Otherwise, it's a general clause where the transferor is a registered taxpayer. And with that, we've completed checking into all 13 points under mandatory registration, all 13 categories of persons who are required to register whether they cross the threshold of aggregate turnover or not. So far in this section, we've seen all the 3 broad categories of people who are liable to register and the 5 people who are exempt from registration. In the next video, we are going to check out why a person should take voluntary registration. What are the benefits involved?